A financial squeeze is quietly building across Canada, and self-employed Canadians may be standing directly in its path. While rising interest rates are hitting everyone, entrepreneurs, freelancers, and small business owners face a double challenge: unpredictable income and a lending system that suddenly feels far less forgiving. Mortgages that were easy to qualify for just a few years ago are now becoming renewed at dramatically higher rates, while stricter lending rules make refinancing far more difficult. For many self-employed homeowners, this isn't just about higher payments anymore. It's about whether the system will even recognize their income when they need the help most. The next 12 to 24 months could become a defining moment for Canada's entrepreneurs unless they learn to fight back. Now, for years, self-employed Canadians have been the quiet engine of the economy. They are the small business owners, the contractors, the consultants, the real estate agents, the truck drivers, the freelancers, the people who create jobs and keep communities moving. But right now, many of them are facing a financial storm that few people are talking about. Rising interest rates, tougher lending rules, volatile income, and higher living costs are creating a perfect pressure point. And as mortgage renewals approach across the country, self-employed Canadians may be the group that's hit the hardest. Thousands of hard-working business owners may soon discover that renewing a mortgage is harder than starting the business that paid for their home long time ago. Canada celebrates entrepreneurs in good times, but when mortgage renewals arrive, many self-employed borrowers are left fighting a system built for salaried employees. This isn't just a rate shock, it's a financial stress test for the entire self-employed economy. Friends, I am Rajiv Talwar, in the business of mortgage brokering for over 2 decades. If you want to stop guessing and start winning with your mortgage, my YouTube channel is your shortcut to clarity. Every week, I break down complex mortgage strategies, renewal hacks, and insider tips that banks don't tell you, all in plain, actionable language. Now, whether you are self-employed, a first-time buyer, or looking to protect your equity, subscribing ensures you stay ahead, make smarter decisions, and turn your mortgage stress into real financial power. Now, please subscribe to the channel, friends. Do it now. Also, friends, you know that when we reach 2,000 subscribers, your name will go in for a draw if you're subscribed, and one winner gets $250 Costco gift card. Also, when we reach 10,000 subscribers, we have another draw, and again, if you're subscribed, one winner gets $2,000 cash, which could go towards your mortgage payment or rental payment. Now, both these promotions are published on our website. Just by subscribing, you get your name in for the draw. And friends, since you're watching my videos in thousands, just hitting the subscribe button may make you win. The names of the winners will be declared on this channel, and wishing you all the best for the same. Coming back to today's topic. Now, here's the uncomfortable truth, friends. The mortgage system was never really designed for people with unpredictable income. When salaried employees apply for a mortgage, lenders can easily verify income with T4s and pay stubs. But for self-employed individuals, income often looks very different on paper. Many write off business expenses, reinvest profits, or show lower taxable income to manage taxes. While that strategy may help at tax time, it can become a major obstacle when it's time to qualify for a mortgage, especially in a high rate environment. And this is exactly where the pressure begins. A self-employed homeowner who secured a mortgage during the low rate years of 2020 or 2021 may now face a completely different reality at renewal. Interest rates have jumped significantly, which means monthly payments can rise dramatically. For some households, that increase could be hundreds or even thousands of dollars per month. But the bigger problem is qualification. If that borrower needs to refinance, extend amortization, consolidate debts, or switch lenders, they may suddenly discover something alarming. They don't qualify the way they did before. Lenders today are applying stricter guidelines. Stress tests are tougher, and income verification for self-employed borrowers is under much heavier scrutiny. In other words, the door that once seemed open can suddenly feel half closed. And when payments rise at the same time, business income becomes uncertain, something many entrepreneurs are experiencing due to inflation and slowing consumer spending. The financial squeeze becomes real. But here's the important part that many self-employed Canadians need to hear. Being proactive can completely change the outcome. Now, the first step is understanding your numbers before renewal. Many self-employed borrowers wait until the last few months before the mortgage renewal to explore options. By that time, flexibility can be limited. Starting the conversation 12 to 18 months early can make a significant difference. Why? Because income can sometimes be structured differently over time. A mortgage professional may be able to work with lenders that specialize in self-employed borrowers or use programs that consider stated income, business bank statements, or alternative documentation rather than traditional tax returns. And another powerful strategy is debt restructuring. Many entrepreneurs carry multiple forms of credit cards, lines of credits, or equipment financing. In a rising rate environment, these debts can quietly drain monthly cash flow. Now, consolidating or reorganizing debt before renewal can sometimes create breathing room and improve mortgage qualification. Cash flow management also becomes critical. Now, self-employed Canadians often focus on growing the business but overlook how personal finances interact with lending requirements. Simple steps such as reducing short-term liabilities, building stronger cash reserves, or improving credit scores can dramatically change how lenders evaluate an application. And then there is the importance of guidance. The truth is, self-employed borrowers rarely fit into a simple lending box. That's why working with someone who understands alternative lending strategies can make a major difference. The right approach can uncover options many homeowners didn't even know existed. Because while the headlines often focus on rising interest rates or housing prices, the real challenge for many self-employed Canadians isn't just the cost of borrowing. It's navigating a system that doesn't always understand how entrepreneurs earn money. But the story doesn't have to end with the financial pressure. With the right preparation, the right strategy, and the right advice, many self-employed homeowners can turn what feels like a crisis into a manageable transition. The key is simple. Don't wait until renewal becomes a problem. So if you are self-employed and your mortgage renewals is coming in the next year or two, now is the time to review your options. Understand how lenders will view your income and build a strategy before the pressure hits. Because in today's market, friends, the self-employed Canadians who plan early won't just survive the mortgage reset. They will be the ones who stay in control of their financial future. Now, the reality is harsh, but it's also empowering. The self-employed Canadians who act early will have options, and the ones who wait may not. In a system that doesn't always understand entrepreneurial income, preparation becomes your greatest advantage. Review your finances, strengthen your documentation, and explore strategies long before renewal arrives. Because the goal isn't just surviving higher interest rates, it's protecting the business, the home, and the financial freedom you've worked so hard to build. And in times like these, the smartest move a self-employed homeowner can make is getting the right advice before the pressure becomes a crisis. So friends, should you or someone you know is going through all this, please call back as you always do and talk soon. Thank you very much.